Welcome to Trader TV, your insight into trading for professional investors. I'm Dan Barnes. Today we're going to be looking at the electronification of markets and how that's impacting the sales and trading function for sell-side firms. Joining me in this are Paul Makepeace, Director at sell-side firm Stifel Nicholas Europe, Pontus Eriksson, Head of Strategy at FIS, and Spencer Mindlin, Senior Analyst at Aite Group. So Pontus, can I start with you? What general trends do you see in the electronification of markets today?
In general, we see acceleration and digitalization are the key trends in the capital markets. We see a lot of speed through innovation, enterprise simplification or consolidation of platforms, if you like, and services-led solutions. There are really key themes: elastic cloud computing, big data, AI and predictive analysis. We see a lot of digitalization of assets, also outside the traditional asset classes, democratization of markets, less friction, more access for everyone. It's also very visible in the retail markets.
Spencer, what's your take on how electronification is affecting markets overall?
Overall, it's very good for markets. What we've seen over the last 20, 30 years of electronification is it's brought down costs for both institutional and retail investors across the board.
Yep.
A big part of that also has introduced different types of complexity, right? The greater electronification, the introduction of new venues and the new types of protocols. I think while some asset classes have matured and we're very far along in the maturity curve, like with equities, I think for other sort of bespoke products and fixed income and some of the others, we're just starting to go up that curve to figure out how is the market going to adjust and how are participants going to really be able to take advantage and how is it going to mature around this electronification of new asset classes.
Paul, when you see markets becoming more electronified, does that create more appetite for quantifiable services in terms of assessing quality of performance like TCA?
Yes, I mean, TCA, venue performance, volume predictions, these are all part of the everyday wheel that clients, are demanding now. In-flight TCA, there's big demand for that now, but it's all about giving alpha to the clients on their execution performance in a way where information is kept very close, so there's no leakage. These are all very much part of the client's makeup, their daily flow. This is what they're demanding from us.
Pontus, what trends are you seeing amongst your client base and in the capital markets more generally in terms of the technology being used there?
We recently did a large survey and we looked at the biggest banks all the way down to asset managers and smaller brokers. We basically asked them where they are in the transformation journey. And it was clear that all of them are in this transformation journey and they want to consolidate the number of systems and go towards cross-asset and electronify more and digitalize more. But actually, the last couple of years, that has been reversed by the regulation that has been in place. So they've actually added a couple of systems to the mix so that the complexity increased a bit further. But it was pretty clear that all of them want to go in the other direction going forward.
Spencer, what sort of technology are you seeing being brought into the sales and trading function at the moment from the sell side?
So we're seeing technology to manage a proliferation of data, right? In order to adopt greater electronification of some of these new asset classes, I think it's really all about being able to generate and provide more data, both for internal consumption and analytics, as well as providing clients a similar sort of experience to the electronic trading of other asset classes. Along with that, new tools for things like TCA, which are still very early stage for fixed income, and even foreign exchange, we're still really not there yet. That's one. I think new trading tools, we're seeing adoption of new trading tools like execution management systems for non-equities and non-plain vanilla asset classes. Again, I think we're still in the early stages of EMS adoption for things like fixed income. Some of the traditional EMSs are really investing heavily to come up the curve. And then there are some new entrants in the EMS space. A lot of this new adoption is shifting to the cloud, right? To enable people to scale, do more, but at the same time, not incur the same kind of cost complexity associated with deployed software and sort of the legacy architectures.
The biggest problem we have in markets which are less liquid is how do we create execution there for clients, So I think, a lot of the instruments, outside equities and outside government bonds, so high grade fixed income, convertible bonds, these sort of instruments, they're still very much led by, primary dealers rather than electronic execution. But, in saying that, we are starting to see a lot more portfolios that are executed that way, and that part of those portfolios include those sort of instruments. But liquidity is where it's at, and how do we improve spreads is the biggest challenge. And that's what the market's got to move towards.
Pontus, how do you see technology adoption in the sales function changing from your perspective? Are there any particular services as well as technologies being brought in?
Senior trading executives traditionally focused on lowering costs, but now they're shifting to revenue generation again. So building competitive advantage is key, right?
Yeah.
To me, what we're seeing is that the sales function in general gains in importance, and the technology used in this field becomes important to update. So we're thinking CRM tools and cross-asset trading platforms, etc. So the current tech stacks, normally they are differentiated across different asset classes, and there are variations in this market, and that's because of the market structure and how you deal with these low touch and high touch type transactions. So to service clients better, you want to have a single go-to salesperson relying on a single technology stack. And there are a lot of benefits with that, because then you can become more client focused, you can solve more of the service issues, and you can have one single solution for sales and for trading. So there's less laborious tasks in between these two functions. And then there's a whole range of other benefits that comes with cross-asset platforms, such as more improved strategic partnerships and those kind of things.
Absolutely. Paul, do you recognise that trend?
Yes, definitely. When you look at flow from clients, we like to, obviously low touch flow is separated from high touch flow. Okay, but the market is definitely moving towards, something which is more mid-touch or more of a hybrid to that, within the constraints that clients need for the best execution. If you look at market trends for this year and the momentum and value trades and the rotation, we've found that, the market has moved from low touch to high touch as clients have found that that's what they needed to do to get that execution.
How do you combine those as a function?
It has to be led by the client from the point of view the client is happy to see that high touch flow. You must make sure that the client's execution absolutely comes first. And as I said before, we must ensure there is no information leakage. Low touch clients are getting a lot more interest in the high touch order flow, if it's going to give them alpha and better performance on their execution.
So does that create appetite for more quantifiable service quality?
We see less physical broker contacts right now in this pandemic, so there's more emphasis on quantitative measures.
Yeah.
And that also goes hand in hand with the development of artificial intelligence and predictive analysis and these kind of things. So I think the new normal is that it's going to be more data-driven analytic and more quantitative approach. So there will be a quest for more data-driven factors to be used in trading and execution. And that will drive a re-architecture of trading technologies and open up possibilities for quantitative analysis.
Guys, look, thanks very much. That's been fantastic.
Thank you for having me.
Thank you.
Thank you, Dan.
I'd like to thank Pontus, Paul and Spencer for their insights today, and of course you for watching. To catch up on our other shows, go to tradertv.net.